Welcome back. Today, I'm going to talk about a $1 trillion time bomb in the housing market. Welcome once again. So let me go ahead and share my screen and going to go over this very significant situation. So this article I found a couple of days ago in the Financial Planning magazine, and the author is Mark Gonloff. And the headline is a $1 trillion time bomb is ticking in the housing market. David Burt saw the trouble brewing in the subprime mortgages during the last recession. And now Mr. Burt runs a company named Delta Terra Capital, a research firm he founded to warn investors about the next housing crisis. And this housing crisis is caused by the climate change. Climate change. This is the next housing time bomb. So I want you to get your comment below after you watch the video. Let me hear from you. What do you think about the effect of climate change can affect the housing market? All right. So again, I don't mean to use this article as a doom and gloom situation. It's a mere way to educate and inform every consumers, whether you are a primary home buyer or whether you are a real estate investor buying rental properties. This could affect you down the road. So anyway, so Mr. Burt argue that the U.S. homeowners wildfire and flood risk are underinsured by $28.7 billion a year, billion with a B. As a result, more than 17 million homes, representing nearly 19% of the U.S. home value, are at risk of suffering what could total $1.2 trillion in value destruction. Okay, again, I warn everybody, once you read any kind of headlines, you have to dive deeper, right? You have to do a deep dive into the headlines and do your own research, whether like negative headlines or dominating the social media, the mainstream media, and any other media for that matter. If you want to become an intelligent homeowner, intelligent risk investor, you must dive much deeper than what is on the surface. You have to dive deeper below the surface of any kind of housing market headlines to form your own intelligent and educated decision. All right. So Mr. Burt go on to say the climate risk research firm First Street Foundation last year estimated that 39 million U.S. homes, nearly half of all single-family homes in the country, are underinsured against natural disasters, including 6.8 million relying on stick-back insurers of last resort. Right. Saying further, a record 28 weather disasters in the U.S. last year did 1 billion or more in damage, according to the National Oceanic and Atmospheric Administration. Globally, the toll from natural disasters has topped 120 billion so far this year. And the reinsured unit estimated this week, only 62 billion of that was covered by insurance, a figure 70% higher than the long-term average. Most of this damage happened in the U.S., and much of it was borne by homeowners. Homeowners' premium rose 11% on average in the U.S. during 2023, according to S&P Global Market Intelligence. They have risen by more than a third in just the past 5 years. In states with the front line of climate change, including California, Florida, and Texas, increase has been even higher. Real-life homeowners stuck relying on stick insurance of last resort. However, these last resort policies are expensive and they are not adequate. So And in conclusion, we have to find a happy medium, right? So we have to determine, so let's see my takeaway. Okay, it's not doom and gloom, okay? It's not, the world's not coming to an end. Yes, climate change is in the forefront of headlines lately. So you, as a homeowner or real estate investor, you have to determine what is the risk and benefit involved. What location do you want to live for yourself and your family as a primary homeowner, or if you want to buy rented properties, what locations, or you can mitigate the risk, right? And I'm in the investment world mostly, right? This is what I do as a profession. So as a risk investor, I have to determine, how do I mitigate my risk? So I'm not going to buy any rented properties in the flood zone or in the hurricane infected areas. But I'm not going to overreact, right? So as long as I buy in a good area, as long as I buy new construction rental properties, that will mitigate a lot of risk. In the suburban area, we still have a lot of opportunities in Florida and Texas, in my mind. So I use the contrarian route, meaning contrarian, I think opposite than the general public. That's what makes it good with most investors. So in Florida, if you buy in the deep in the suburbs, away from hurricane, not in a flood zone, you buy new construction, cash flow properties, you will get very good insurance coverage, right? Because insurance companies love new constructions, and also new constructions, they meet the most modern safety codes in Florida and in Texas and anywhere in the country for that matter. So at the end of the day, the insurance premiums and skyrocketing insurance costs, that's a concern. However, if you buy away from the coastal areas, which have high risk for hurricanes and floods and tsunami, whatever, that's fine. Okay. So there are insurance companies that will insure you in a very good rates, even in Florida and Texas, but you have to buy in the right location away from the coastal area. So again, you will have to continue doing your research. It's not doom and gloom. The world's not coming to an end. So there's a lot of great locations to buy primary homes in the US, and in particular for those investors. So that's all I have to say. Knowing that the climate change is going to be in the forefront of the news for the foreseeable future. But again, you have to do your research, get educated. There are still opportunities out there. So don't jump into conclusion, right? Don't get paralyzed by this doom and gloom, fear-based negative headlines. It's just take a step back, relax, and slowly do your research, and you'll be fine. All right. So if you receive any value from this video, please like and subscribe to my YouTube channel. And better yet, put your email into my email inbox on my website below you, so you could become a free member of our real estate investment community. So with your email, we will send you investment opportunities, real estate education, real estate investment education directly into your email inbox, almost pretty much on a daily basis. So you become a well-informed and a great potential long-term investor buying rental properties. All right. Thank you so much. This is Siwen Yi. I'll see you on the next video. Have a nice day. Bye-bye.